Did you know that you can make a living if you trade with one simple strategy? Day trading can make you a lot of money if you do it right. But doing it right is the trick, and that's the point I'm going to make today. This never fails. Too many traders don't understand that the market is a 50-50 game. If you take 100 trades, you might win 50, you might lose 50. And that's as good as it gets. If any trader tells you they're winning 90% of their trades, heaven alone knows where they got the magic pill, but generally that doesn't happen. The way traders make money, the way day traders make money, is by managing their risk. The only way that you can make money properly is by managing your risk. Hey, if you want to trade every day, go check out my blog. 10-15 seconds of your time, nothing more. Visit the secret blog. Free trade on there every day, which I post totally free. Guys, it's not financial advice, just a trading idea. On the blog as well, you'll see on the left, little PDF, free Forex book, my gift to you, asking nothing for it. But enjoy the trade every day. It's always nice to know what everybody else is doing, isn't it? Now that you've checked out the secret blog, that you can follow those trades, but just remember, they're just an idea. No perfect trades there. As I said to you, the stock market is a 50-50 game. Hey, it's logical trading, it's Rob Guilty, and trading's risky. Trading is very, very, very risky, guys. 80% of traders lose money, and if you don't like losing money, don't trade. That's it. Now, if you go and you start trading, and you've got 1 million indicators on your charts, you are going to become so confused that you're not going to know what day of the week it is, whether it's Monday or whether it's Friday. In fact, if it's a Saturday, you might think you're still trading. I'm going to show you my system in a minute. Now, the big thing is to understand that you just need to take all the noise off of your charts and simply trade with one simple, easy strategy. Now, if you have a strategy, by all means, stick with it. Don't change your strategy or your system every 5 minutes, because there is no magic pill in the stock market. The stock market is effectively, if you had no system whatsoever and you took 100 trades, you'd win 50 and lose 50. Okay? There is a way of experience teaching you to read the charts. If you look at the charts on a regular basis, you will gain a lot of experience seeing the patterns, seeing how they work. Do some research on chart patterns, do some research on all the systems and all the magic indicators out there, because they will help you with your confluence as to whether the market is going up or whether the market's going down, what the macro picture is, and that sort of thing. I know traders that won't even look at fundamentals. Fundamentals can help you understand where the market might be going in the future, but be very careful of these guys calling inflation, because the guy says the CPI is such and such and such and such today, it's 4.2, and everybody sells. And you join the crowd and you start selling, and it's a big mistake, because effectively the market is run by the money flows at the end of the day. So the money that's flowing in and out, it's got nothing to do with all the rest. So you end up selling off when you should have been buying. And it's as simple as it gets. So hey, check out my trading system and see if it helps you. So if we go onto the chart, before I show you how I got to this, I want to show you effectively where we are a little bit further back, all right? And then I'll show you how we got to this. If you look at this, you can see I've got an area drawn in here. This is a support or a resistance. Can be one either or, support or resistance, okay? Now, you'll see the price went in here. Now, your first initial thought on this probably would have been, we're probably going to go short here. But no, because if you look at this guy, it's got a long upward trend, right? That's an uptrend. That is not a downtrend, guys. That's an uptrend. We're on the 4-hour chart here, by the way. That is an uptrend. So stay with the trend if you can, because what you would have been doing is trading against the trend. In other words, saying, well, it's got too high, I think it'll go down now. It's possible. People do trade that way. We trade that way. but it's better to stay with the trend. So before you take this trade, you want to make sure that the red bar has come out of the area, or if you've got a green bar, right? So let me just remove that arrow. So what actually happened? Move this along, look what happened. What happened was we got a green bar, a confirmed green bar, and not only any green bar, a big green bar. Okay, this is a big green bar. So what we would have done is we would have gone long here, right? And we would have followed it, and at that point we probably would have had a trailing stop because that would have been the target, and we would have got out of the trade. So I just wanted to give you that idea that you would have been thinking we might be going short here. If you get in too early, that's what it's going to do to you. You wait until it confirms, goes out of the area, gives you a nice big green bar, or even a little one, it's fine, as long as it's confirmed and it's closed. Not an open bar, closed bar. Then you can trade. Now if you follow along, you'll see here you could have taken another long trade, but now we're actually calling another long trade if it comes back down into this area. Okay? So I'm going to remove all of these drawings and show you how we come out at this area so that you can do it as well. All you've got to do is you've got to take the 4 hour and put it on a day chart. This is the DAX, by the way, Germany 40. So now you've got it on the day chart, right? On the day chart, put it on a line chart and have a look at what you got here. It's easier to see the points on the line chart. Then all you got to do, we draw blocks in because straight lines are very, very accurate, and you're expecting a price to bounce off an exact line. I don't know. Give it a block, give it a bit of space, right? So what I normally do is I'll draw it off this area. So I'm just looking at this and thinking, okay, there's 1, 2, 3. You've got to have 3 points. You've got to have 3 touches, right? So those are your 3 touches. That looks like a really good, reasonable support area now. We call it support because it's at the bottom. We call it resistance when it's at the top. Don't draw millions and millions of lines on your chart. I've seen many a trader teaching people to draw like 400 lines and resistance lines and crap all over their chart. You're going to get confused. Keep it simple. Keep it as simple as possible. 2 blockies is the best. 1 at the bottom, 1 at the top. That's always good. You can put a 3rd one in just to like remind yourself of a supply area or something like that, but try and keep it simple, right? Now what you do is you put it back to the candles, because the candles, what the candles do is they tell you there's a bullish momentum or there's a bearish momentum. The tails will tell you that the sellers are getting out or the buyers are getting out because there's a long tail. You know, the undecided ones and all these different little things. And you can also pick up the double tops, the double bottoms, all these nice little things from the candles. So keep an eye on the candles, because one of the big things with the candles as well is, for example, if you look at this, 3 big moves like that, that actually gives you a nice demand area down there. So, you know, if you get 3 big red ones down, that gives you a kind of a supply area. So, you know, you look at it and you think, it actually falls into place as well, falls nicely into place here, right? Now what you do is you take it back down to the 4 hour or the 1 hour or whichever time frame you want to trade on. All I say is take your levels from a higher time level because they're more accurate. I particularly like to take the day level because it's very, very accurate in comparison, and then I can trade on the 4 hour or the 1 hour, the 15 minute, the 30 minute, whichever I feel like, okay? So let's have a look at this now. So now you've got this coming down into this support area quite nicely. Okay, as we saw earlier, it's already the trade we were looking at earlier. Now what you do is you look at this and you say, well, it needs to come down, at least down into the area, right? Somewhere down here at the 164.50, 164.70 area. We're at 165 now. So your idea is it's going to come into here, and then it's going to turn, go up, and give you a nice big green bar somewhere here, confirming that it's going back up. And the reason I'm looking at a long trade is because if you look at the overall picture, the trend is up, and the trend is your friend. It's going up. This could be considered a rather large flag pattern, and they normally continue on upwards. That said, we could have a double top, and this could be crashing back down. And if in that event it does that, and it's not to say that it won't, then what will happen is this will break through here. It will break through this level, okay, it'll come back up, and you'll get a red bar confirming down, okay. Believe me, it's not going to be as simple as it just breaks through and goes crashing down. It will always, it'll come through, it'll go back up, and then it'll go down. Okay, that'll be your nice red bar going down. Nothing can predict the future, remember. So while we're looking for a long trade, this trade could also go short. Well, what do you think? It always could happen, right? I mean, these things are not set in stone. These are things that can happen. We don't know what the future is here. I'm not like other people who teach you and go back on the chart and do a reconstruction of the whole chart, and we know what's going to happen next. We really don't know what's going to happen next year. If we take this long trade when it's ready, we don't know if it's going to succeed. All we can do is pretty much put a trade in when it's ready, put a profit level target at about 170, and we're going to put a stop loss below that low over there. In fact, a little bit into the middle of that big green bar over here. Okay, so that's below this lot, right? That gives you a clear area to work in so that if it pops down. But my kind of way of trading is if this starts messing around down here, I'm out, because my trade has invalidated. I would not take that trade long if it was trading somewhere in this area, okay, because it's gone. So I'll probably get out long before it reaches the stop loss, taking a small loss and waiting for my next trade. But if it goes long, I'll actually add to the trade in these areas because I expect it'll go quite high. And that is as simple as the trading system gets. I'm not going to show you supply and demand today. This is price action trading for beginners, just so that you get an idea of how price action trading works. If you're trading with a different system, let me know in the comments, and if you want any comment on it, I can put a video together on it, and I can show you how to improve or better that system, or how to trade that system correctly if you're trading it wrong. I don't say you should trade your system and do this, but there are a lot of indicators out there that you don't need, that you should probably take off your chart. And I just prefer this because it simplifies everything, and the main reason I trade with this system is because I can manage my risk. That's as important as it gets. I can manage my risk. So now that you've seen the trading system, now that you know what the trading system is all about, this one simple strategy never fails, and it always helps me. But that's my strategy, guys, not yours. You're welcome to have it. You can use it. If you don't have a strategy, please, by all means, this is the simplest strategy you're ever going to find in the world. But if you have a strategy that's working for you, don't change it. Stay with it and use it. But just remember, I always say, lagging indicators like moving averages and stochastics and MACDs and things like that, they are lagging indicators, and you might be getting into your trades too late, and you might be leaving a lot of profit on the table. So I prefer to trade, as I say, with the support and resistance, or the supply and demand, because that always makes me money, right? And it's all about managing your risk. That's nothing else to it. Guys, thanks for watching. Check out the next video. Till tomorrow. Bye.